The Turkish central bank leaves rates unchanged in data out earlier today. So what impact has this had on markets? Looking at this and more, I'm joined by Ozlem Derici, chief economist at Deniz Invest. Ozlem, last time we spoke was in the aftermath of the electoral results, where the AK party lost its majority. Since then, Turkey has yet to form a government. Is there a chance of a snap election?
The coalition talks are continuing right now, but yes, there is a good chunk of chance of snap elections still. Not just us, but also politicians say so. It is more than 50%. But currently, the leading party AKP and the Republican CHP is in negotiations for coalition. It's an ongoing process and will last for 45 days. This week, the committees for coalition talks has been formed, and next week the negotiations will begin. But as there is only one party to engage in coalition talks, the negotiations fail. We will probably see an early election by November. The markets are not reacting well to snap election scenario. When we see positive news about the coalition talks, parties' intention to form the coalition, and some progress in the talks, market reaction is positive. We see some ease in exchange rates, a pickup in stock market, and ease in bond yields. But as we get closer to snap elections, or if we get closer to snap elections, it is not fully priced in. So we will probably see some more sell-off in the market if in such a scenario.
Turkey's central bank held its key interest rate steady for a fifth straight month today, citing delay in improvement in inflation indicators, volatile energy and food prices, and uncertainty in the global markets. It was an expected move, so has there been much reaction in the market?
There was not so much reaction because there's a full consensus about the central bank's decision not to change policy rates. The statements would be much more important, but the statement had also no major change compared to previous one. It follows a somewhat dovish stance because the bank expects a deceleration in inflation. We will see some deceleration in the next couple of months, but the base effect will work against inflation in the final quarter of the year. So inflation will pick up at some point. Will start picking up at some point, and at the end of the year, we expect an over 8% inflation realization, whereas central bank currently expects 6.8%. At the end of the month, central bank will release its inflation report. It's a quarterly report, and in this report it provides its latest projections about inflation. We will probably some upward revision due to higher than expected exchange rate depreciation. So inflation will not stay at those levels, currently at 7.2%. That's why, although we didn't see any material change in the statement or no change in the policy stance, we do not expect the central bank to ease liquidity conditions due to this high pressure over exchange rate, and also volatility coming from political uncertainties and also emerged geopolitical risks, of course.
And in regards to an Iran nuclear deal, Turkey definitely felt the negative effects of sanctions. With the potential lifting of these sanctions, Turkey will surely economically benefit. What's the general feeling in Turkey about the deal? Are there any concerns?
There are not so much concerns. Mostly the reactions are positive by both politicians and also business environment as well, because it has it will have both direct and indirect impact over Turkish economy. Direct impact will come from trade, of course, and also investments, infrastructure investments, construction investments. Trade side is very important because Turkey, as a close neighbor, has currently 13 billion trade volume with Iran, despite the sanctions, and 3 years ago it was above $20 billion total trade volume, and government officials say that they want to increase it to over $30 billion. That's a great potential for trade relations. The lifting of sanctions is has a great potential, and also the sectors primarily where sanctions are lifted, like food, pharmaceuticals, spare parts industry, will immediately be effective. And thereafter, analysts say that sectors like energy, retail, and automotive sectors will be the other beneficiaries from lifting of sanctions. And also there is an indirect impact via, of course, commodity prices. The lower oil prices will be much more important for Turkey's energy costs. Iran will again be a major partner, trade partner in oil imports, and also, of course, gold prices will also the expected deceleration in gold prices will also be positive for Turkey. So that's the indirect impact. Overall, the reactions are quite positive in Turkey.
Some great insight from Ozlem Derici there. For more in-depth analysis, make sure you keep clicking back to Dugascopy TV.